Hi, I'm Shashank Bhargava, and you're listening to Three Things, the Indian Express news show. Yesterday in the Lok Sabha, Finance Minister Nirmala Sitharaman presented her 9th consecutive union budget covering the period from April 2026 to March 2027.
Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027.
This budget comes at a time when questions are being raised about India's actual economic growth, concerns over US tariffs are looming large, and the government continues to shoulder the responsibility of stimulating the economy. To understand how the budget addresses these challenges and what it reveals about the government's broader plans, the Indian Express's Udit Misra joins us. Udit, in order to understand what this budget does and does not do, I think it's important for us to understand the challenges that Finance Minister Nirmala Sitharaman and this government have been facing when it comes to boosting the economy. Now, we mentioned some of them right now, but set the context for us. What have been some of the biggest challenges for this administration?
Yeah, so, if you look back since the time Prime Minister Narendra Modi took charge, as has been repeatedly said, that India's economy was just coming out of a slowdown, which was sort of in the aftermath of the global financial crisis of 2008. And the economy had just started getting back into its rhythm. But still there was this something called the twin deficit problem that, banks were saddled with a lot of NPAs and the private sector was over leveraged. They had taken loans which they could not repay because the economy was not doing that well. And so the first term largely went into solving, seeing those problems get sorted. And the larger guiding principle always was the mantra of minimum government and maximum governance, which essentially means that Mr. Modi wanted the government to come off the big positions in the economy, let the private sector take the lead in taking India to the growth path. And the expectation was that with government disinvesting in its existing assets and getting away from other sectors of the economy, private sector will come in and, invest and create jobs and prosperity. And to this end, the government made a lot of reforms which was stuck because of coalition era politics. They could not happen, but Mr. Modi had a clear mandate, and so he could push through with long-standing reforms like the goods and services tax, which was a change in the indirect tax regime, the insolvency and bankruptcy code. And the hope was that the economy would finally get into a mode where the private sector leads and the economy gets into a virtuous cycle of job creation and prosperity. But this government also found that the disruptions to the economy, either be it in the form of demonetization or even the fact that GST, the way it was launched, or there was a financial crisis in the MSME sector, all through 2016, 17, 18, the growth started faltering. And the diagnosis that this government had in 2019 when they came back for the second time was to ignore that there was an unemployment crisis or there was a consumption problem. And they thought of it as a production-led problem.
Yeah, according to the government's diagnosis, it was not that people don't have enough incomes. It's not that they can't afford to buy a lot of goods. Their diagnosis was that it's a supply-side problem, that manufacturers need to be incentivized. They need to come out with more and different kinds of products.
Exactly. And so to that extent, they unleashed a whole set of reforms, which by themselves are not wrong, but possibly ill-timed. And we have talked about this in many previous podcasts. Every budget, in fact, we revisit this issue. That in 2019, outside the budget, they had the historic cut in the corporate tax, which was to incentivize private sector. The hope was that the tax cut would allow private sector to have more money in their pocket and then they will invest that. Alongside, the government also did two more massive things. One was that it spent more and more of its money towards capital expenditure, which is to build roads, bridges, and these things tend to reduce the cost of business otherwise for a private business. So just making it easier for them to come into the market. And the other thing that they did was to give almost a direct subsidy through PLI, the production links scheme, to companies. If you are to lay down a company or a factory, we will give you this much amount of money to create those many jobs, which was a direct subsidy. And the hope in the next 2-3 years after 2019 was that the government has done everything and that the private sector would finally, provide the solutions. And that whole vision of minimum government and maximum governance would come through. But partly because of the shocks like demonetization, the MSME crisis, and partly because of things like the pandemic, those things didn't happen because there was an underlying consumption problem. People were not consuming enough because they didn't have perhaps enough income, not enough jobs. And all of that meant that as we approached the 2024 general election, it was amply clear to the government that supply side response is not going to take off until unless they did something about consumption.
Yeah, and this is when they finally decided to give more money into the hands of people. And so they gave tax reliefs, and there was also a reduction in GST.
Exactly. So in the last 2 years, we've seen that government has both in terms of annual budgets has provided those reliefs, but also you would see a substantial bit of relief being provided by political parties across the board by means of many of these what are called freebies, direct cash transfer schemes where the government is simply just giving. And it started off with something that the Prime Minister started with, the money for farmers.
Yeah, this was the Pradhan Mantri Kisan Samman Nidhi.
Yeah, so the government, it started off with that direct cash, which is basically that, you are a farmer, so I will give you 6,000 rupees, right? There's no other merit in that. You don't have to do anything. You're just a farmer. I'll just give it to you, right? And so we have seen many such schemes happening otherwise within the budget and outside the budget, where political class has been trying to boost consumption amongst the people. But again, whether or not that has helped as yet is not very clear. The data suggests that the private sector investment is still below pre-pandemic levels. So it is still, the growth has not really picked up. And this year in particular, the year that has gone by, we've seen a lot of upheaval due to the tariff wars, the trade wars under President Donald Trump. And a thing about those tariff disruptions is that many of the bigger companies may not have been as badly affected as most of the smaller firms, the SMEs, MSMEs, and the smaller economic entities. Say a shrimp farmer is far more brutally affected by the Trump tariffs, not maybe a pharma company, because maybe Trump wants those pharmaceutical products to come into US cheaper. So this year, again, there was this worry that India is sort of losing its grip on the broad growth story, while the overall numbers were good, but the fact that rupee was losing value, people were pulling out money from the country, raised this suspicion that perhaps not everything is as rosy as the overall numbers show.
Yeah, and with the private sector not investing, the burden has been on the government to boost the economy and provide jobs to people. But worryingly, this has happened at a time when the government's revenue has been going down. So talk about that a bit, because that again is a challenge, right? Because how do you boost the economy when your own revenue is going down?
Yeah, so I mean, if you look back over the last 20-25 years, there's a back of the envelope calculation for every year for India's growth, which is to say that in nominal terms, we'll grow at something like 12%. Nominal terms is basically GDP calculated in today's prices. This is the observed value. And then you say, how much of this is the inflation impact, right? In a year, how much have prices gone up? Typically, you pencil in 4% of inflation because that's also the target range for RBI. It is assumed, it has been shown through research that a 4% inflation is ideal for India to sort of function as an economy. Anything lower is a problem, anything higher would be a problem. So you take away that 4% out of the 12% nominal growth and you get something like 8%. And that's the rough calculation. What has happened in the last 2 financial years now, back to back, is that we've had sub 10% nominal GDP growth. This year it was 8%. The year before it was, I think, 9.7 or something. And that puts a lot of pressure on budget mathematics, because all of budget numbers start off with as a percentage of the nominal GDP, So when the base number itself is not growing fast, everything gets shrunk. You cannot raise your revenues as much. The government cannot raise as much money. The amount of money that it can borrow, which again is fiscal deficit as a percentage of the nominal GDP, that also comes down. So it really starts, that constricting feeling starts happening, that the government it finds itself in a position where it can neither raise much nor borrow as much, and as a result also not spend in any of the sectors. So the last 2 years have seen nominal GDP being weak, and even though inflation effect is low and so real GDP numbers look very rosy, the reality is that in everyday economics on an annual basis, the numbers are really tight. The growth is not as much. So India's GDP is rosy if you look at it one way, and very stark and very poor if you look at it another way. In budget making, it is nominal GDP that matters, and that is where all the problems have started.
Okay, so if the government's revenue has gone down, it's essentially left with two choices, right? Either it borrows more and increases its fiscal deficit, or it chooses to cut down on its spending. Tell us what this government chose to do.
Yeah, so this is both, again, different people will look at it differently. This government has chosen to stick to the path of fiscal consolidation and fiscal discipline. So at one level, one could argue that this government still doesn't see so much problem in the economy that it has to sort of break all rules. Whatever we are growing, we are still growing while the government is trying to pull away from the economy. It's consolidating its finances. It's not actually putting in money in the economy. It's actually holding back. And that is when we are still growing this much. This government has not decided to say that, okay, I will hold back my fiscal discipline right now for the next 2-3 years or whatever and spend more in certain areas. Partly because we've gone through that journey when the pandemic hit. And if you do not create enough buffers, then you don't know when the next crisis happens and you may not have the money. So it's considered to be very prudent that the government has not done that. But that has resulted in curtailing of expenditure. So as I've shown in the piece that I've written for the Indian Express, if you look at for the current financial year, the difference between revised estimates and the budget estimates, that is what you said at the start of last year, what you would spend on, say, health, education, urban development, social welfare, and what you ended up spending at the end of the year, there's a massive gap or a substantial gap. Urban development, for example, was ultimately the money spent is 40% less than what was initially thought at the start of last year. Even on capital expenditure, which is something that this government treats very close to its heart and has been pushing for that every year, and very creditable achievement that is, even that got hit as against what the initial estimate was and what they finally could manage. So fiscal consolidation has happened by curtailing expenditure. Now, some may argue that this is not good. Some others may say this is the best thing about the budget.
Right, and now let's come to this budget. And since you mentioned capital expenditure, let's start by that. This is something that this government has been trying to do, and this is one of the major ways that it generates employment, building bridges and roads and all kinds of other infrastructure. So talk about what this current budget plans for capital expenditure.
So again, for the next financial year, this government has again projected a decent increase. Obviously, with the caveat to our listeners that, budget estimates is just one thing. What really matters at the end of the year is the revised estimates, and that we'll get to know next year. But it has to be said that the government has continued with the focus on capital expenditure. It has not completely junked that view. And this is something that the Economic Survey reiterated, that long-term growth happens only when the governments continue to push for infrastructure, not in an episodic manner, but in a sustained manner. So you have to have trust that the government will not just give up building infrastructure because you've had a bad year. You'll keep at it. You may have to suffer a bit of a drag on that, but you'll continue to do that. And it is a fact that in India, we need a lot more infrastructure. It is just that we don't have as much money to give or to spend in a particular year, but we must keep pushing for more and more capital expenditure, and the government has stayed on that track. What is additionally good is that for the next financial year, the fiscal deficit requirement it's a very marginal decline in the fiscal deficit requirement. So that means that the government would be less pressured to curtail its expenditures and meet the fiscal deficit targets. So it has set itself slightly easier target in fiscal deficit terms so that it has more room to continue to spend.
And just when it comes to capital expenditure, one of the things that has been announced is that the government will build 7 more high-speed rail corridors, and these will be between Pune and Mumbai, Pune and Hyderabad, Hyderabad and Bangalore, Hyderabad and Chennai, Chennai and Bangalore, and Delhi and Siliguri. But also, Udit, when it comes to jobs, the government has also announced that it will be facilitating a lot of programs for caregivers and setting up committees to identify service sectors that can increase India's share in global services. Now, India has been a service-led industry for some time, even though experts say that, manufacturing obviously will be a better prospect for us. So talk about what stands out to you about this announcement, and what does it mean that even now we are mainly focusing on services?
So, on the face of it, none of these schemes which you mentioned are necessarily bad or poor in any way. They are well-intentioned and perhaps they will result in some positive employment. But I would say that for a country of India's size, and where the requirement for job creation runs into crores every year, any scheme that creates a few thousand jobs, 10,000 jobs also, over maybe 1 year or 2 years, is just a drop in the ocean. It is frankly not enough. Actually, the more structural, and this is one of the criticisms and weak points of this budget, is that it doesn't have an overarching structural solution, finally, to India's growth, because we need to create jobs at a massive scale. And none of these smaller schemes will, while they may create some hope alive and create some job creation in different pockets, this is not necessarily a structural solution. So again, it's a matter of knowing which is the horse, which is the cart. You have to set the ordering right, and the government has to focus more on the structural bits than on micromanagement of every small scheme.
And also, how is this government planning to tackle the issue of private sector not investing? Is it still sort of waiting for the Hanuman to fly in that sense? What is it planning to do on that front?
So if you look at the economic survey, last year the notion was that the government should be easy and sort of give some more room to the private sector. There was this notion that there is too much of an overbearing presence of the government in telling what is what. This year, the economic survey had a different tone. It sort of castigated the private sector for not doing enough. I would suspect that, the government is, I think, confused about what more needs to be done in terms of the private sector, because they have done a lot of, as I said, a lot of reforms, a lot of tax cuts have been given. They can only hope that at long last, some of those things start blossoming into, widespread growth engines. And this is something, again, we've discussed in the past, that perhaps the ordering was wrong, where we first had to give some kind of a consumption boost and then provide a production boost, like a corporate tax cut. What we did was, in 2019, we first did the production boost by corporate tax cuts and PLIs when there was no demand, and then later tried to address demand, by which time a lot of people were fairly indebted. RBI data is fairly clear about this, that there's a massive rise in indebtedness in the country. And so now it's taking painfully long, and there is very little the government can do in the short term, because the overall growth is also a little anemic now. And the global environment is really getting worse with every passing year. So, yeah, it's a tough situation to figure out what is the next big thing that the government can possibly do to incentivize private sector. It has to be remembered that the private sector does not come out to invest until unless there is a profit motive. So you can sort of reach out to them on counts of nationalism or, their civic duty or their role in the society and all of that. But I don't think that really works And ultimately, they will come out only when there is enough demand.
Also, like we mentioned earlier, for the past 6 months or so, one of the biggest concerns, especially for Indian exporters, has been the 50% tariffs that the US has imposed. In what way does the budget address that?
So, as I said in the piece, that, this budget, the government has come back to focusing on supply. They've been focusing on consumption, but this year, for the next financial year, they are now going to focus back on supply, partly because supply is going to be hit because of the tariffs. And one way they are planning to do this is by saying that we'll reduce duties on intermediate imports. As we've talked in the past also, that when India exports something, it also imports a lot of things which are intermediate inputs to those exports. So the idea is that let's reduce duties on things that are intermediate inputs and make it easier for our exporters to put together the final product and then push that product out so that you're more competitive in the global market. So many such tweaks have happened in the custom duty structure. And again, that's a way to, address in a structural manner. Hopefully that happens, where if we can boost our exports, there would be more prosperity at home. And also with higher exports would come higher demand for rupee. And as a result, the rupee's exchange rate may also improve. Because right now, the continuous fall in the rupee exchange rate is hurting everybody.
And also, Udit, at a time when the private sector is not investing that much and the government has a problem increasing its revenue, it is looking for stakeholders who can invest in India's economy. And to that effect, it has made changes to the person's resident outside India scheme. Could you talk about what that scheme is and what changes have been done to it?
Yeah, so as we know that, one of the main areas of concern going into this budget was the fact that not enough money was getting into the country. I mean, in fact, foreigners were pulling out money, both foreign direct investments, foreign portfolio investments, and even Indians were putting money outside the country. And this had put a massive pressure on the rupee, because the old story was that, yes, we had a trade deficit, which means we used to spend more on imports than what we earned through our exports. But that gap was papered over by the fact that people used to invest in India, thinking that this is a growth economy. People will make money. But as I mentioned, that corporate performance has not been that great. Sales have not been that great. Stock markets are overvalued and they have not returned much. And a lot of money has flowed out of the country. This was one way to bring more money, hopefully incentivize people to invest in the country. The exact term person resident outside India is I think a broader term in the law, in the Foreign Exchange Management Act. And it has overlaps with the definitions of NRI and person of Indian origin. But it's a larger framework where you open it up, your markets, to investments from people who are of Indian origin, staying outside largely for more than 182 days, and are now free to invest to a larger extent. The limits have been raised to how much they can invest and how much they can invest in one entity.
Yeah, from 10% of their paid capital, they have raised it to 24%, and the individual investment limit has been raised from 5 to 10%. But Udit, besides this, one thing we discuss every year is that our spending on health and education has always been really, really low. Usually 1% or lower than 1% of the GDP. Now, at a time when we are talking about incomes being low and there not being enough jobs, what role do these two things play in a scenario like that? To what extent can investing in healthcare and education help India address some of these concerns?
So regardless of the events of the last 12 months with the tariff disruption, there was already a lot of question marks, both on the services, the highly technical services bit that we typically enjoyed a dominance in, and the old long-standing problem of manufacturing jobs, where again, AI and technological know-how can actually turn a lot of these jobs redundant because of what robots can do and what AI can do. So there is a genuine problem understanding where a country with surplus labor stands. Now, it's not all bad because the world over, and in a decade that will happen to China also, but most of the European countries are facing a decline in their population profile. They're aging too fast to maintain levels of economic output. So India is at a very, in some senses, an opportune moment. However, we need to understand that human resources that we have, are they really productive? Can they really contribute? And the two main things that matter in that regard are health and education. So it is not just that we need to do more on education, we need to actually revisit our education in a very different manner. Whether it actually suits to future of what the jobs might lie, what kind of jobs might there be. And you can see some slivers of that in the budget somewhere, one policy move or one suggestion. But there is no overarching framework that we need to get this piece of our economy sorted, because without that, we are sitting on a large pool of young people who might turn unemployable, who are already to a great extent unemployable. And that is why we have such a large pool of people struggling to get jobs or doing jobs which hardly pay them. The link between what the market needs and what they can provide has to be addressed in a very structural, very cohesive manner. I still do not see that kind of a framework and that kind of a national priority that this is our number one resource, our young population, and let's try to get them in a so well trained, so well skilled that they can participate in whatever the economy throws up in the future.
And this is also the year that India will see elections in 5 states and union territories. Does the budget reflect that in any way? Because this is something we've seen in previous budgets, that poll-bound states get some kind of allocation. Did that happen this time?
Well, we didn't see too much of that noise. There were some things like coconut promotion scheme, but between BJP's strength in states like Kerala and Tamil Nadu and, the nature of the kind of schemes that touch some of these electoral states, it doesn't look like the kind of political giveaway or freebie that would sort of trigger those kind of accusations. I think, in broadly speaking, it hasn't been the main concern of the budget to somehow get a political advantage out of it, partly also because perhaps there was not enough space to address those kind of concerns in this year. And the positioning of BJP vis-a-vis many of these states is not such that it's critical for BJP's existence or dominance in the rest of the country.
And the other thing, of course, we didn't see during this budget was that there was no major changes for individual taxpayers. And I suppose that is because the government has only recently done that. But was there anything else that particularly stood out to you? What was your upshot?
So on the tax bit, the fact is that, and this needs to be understood, that in India, the income tax exemption limit is 12 lakhs. The average income of an Indian is 2.5 lakhs. So already our exemption limits are way too high in that sense. Now, this may not sound like a very kind thing to say, because even at 12 lakhs, perhaps people living in cities, especially bigger metros like Delhi and Mumbai, may not be terribly comfortable. But that's the fact about our country, that per capita incomes are fairly low. So you'll have to tax somebody to perhaps address those gaps. Overall, I think this was a year when I think there was just too much happening globally. And I must also remind the listeners that, within less than the next month, by the end of February, we'd have a new series of data for inflation and we'll have a new series of GDP. And many of these things may get appended. So our notion, our understanding of what the ground reality is set to get a revision. And I'm sure the government would be aware of where broadly the situation is. But I think there was just too much happening and there was no clear vision in the budget. Apart from saying that let's not just throw away the fiscal responsibility bit. Let's stick to the broader thing and see if we can alleviate some of the economic stress that has built up in different areas of the economy through very targeted schemes. They might be small in nature, but very targeted, to provide some relief within the scope of the limited scope that they had, financial scope, and live for another year to see where we are, how things pan out globally, geopolitically, what is happening. But yeah, as of now, there's no larger, broader vision in the budget. It is a budget to survive for another year without maybe throwing the baby with the bathwater.
You were listening to Three Things by the Indian Express. Today's show was written and produced by me, Shashank Bhargava, and was edited and mixed by Suresh Pawar. If you like the show, then do subscribe to us wherever you get your podcasts. You can also recommend the show to someone you think will like it, share it with a friend or someone in your family. It's the best way for people to get to know about us. You can tweet us at Express Podcasts and write to us at podcasts@indianexpress.com.